Hello, this is Jo from Kepler Trust Intelligence. In today's video, I'm going to provide a brief overview of BlackRock Smaller Companies, which has a ticker BRSC. So let's start off with the manager, Roland Arnold. Roland's managed a trust since 2018 and also the open-ended UK Smaller Companies Fund since 2015, and he's also co-manager of the UK Special Situations Fund. Roland joined the firm in 2000 and he's been managing small and mid-cap portfolios since 2006, and he's also supported by the extensive resources of the BlackRock Emerging Companies team, and they conduct around 700 company meetings each year. So what's a principal investment objective of the trust? Well, it's to achieve long-term capital growth by investing in a portfolio of smaller UK quoted companies. Now, the trust focuses on high-quality growth companies that can shape their own future regardless of the broader macroeconomic conditions. And it's fair to say that the UK small cap sector offers a fertile hunting ground for active managers, with an investment universe of over 1,000 companies. And as an inefficient and under-researched market, it also presents significant opportunities to generate alpha over the long term. Now, the UK small cap sector is home to many market-leading businesses, and they're nimble enough to capitalise on the growth opportunities, and they're often in niche areas beyond the traditional FTSE 100 sectors. Many of these companies also have a global focus, with a significant proportion of their revenue coming from overseas markets. So as a result, small caps have historically outperformed their large cap counterparts over the long term. For example, the FTSE Small Cap Ex Investment Companies Index has returned 107% in total share price returns over the 10-year period to the end of 2024. And that's well ahead of the 83% return of the FTSE 100 and 63% return for the FTSE 250 Ex Investment Companies Index. Moving on to the portfolio, BRSC holds a portfolio of high-quality companies towards the lower end of the market cap spectrum, typically ranging from around 150 million to around 2 billion. Roland tends to maintain a diversified portfolio of around 100 to 120 stocks, although it has recently been closer to 100 due to a high level of M&A and a low number of IPOs. However, Roland has participated in 2 recent IPOs. That's the buyout firm Rosebank Industries and also the technology company Raspberry Pi. Now, Roland looks for 5 key criteria to provide the foundation for sustainable growth, being a strong management team, market leadership, which provides pricing power, a track record of growth, good cash generation to fund future growth, and a resilient balance sheet. Now, I'd highly recommend BRSC's monthly fact sheet because this provides an excellent insight into current portfolio weightings, amongst other things. So as you can see, the portfolio is well diversified by weight. Roland manages risk through portfolio weights rather than target prices due to the potential liquidity issues at the smaller end of the market. So if a position's weighting exceeds 3%, Roland will typically trim his position, but he may also add to a position if the share price falls, but the investment thesis remains intact. There's also a strict sell policy on promotion to the FTSE 100, and that enables Roland to recycle proceeds into the future stars of tomorrow. Turning to sector positioning, it's largely a function of stock selection, so the quality focus typically leads to an overweight to industrials, financials, consumer discretionary, and an underweight to resources. The portfolio is well positioned to benefit from the government's plan to build 1.5 million homes over the next 5 years, alongside increased investment in infrastructure. So as a result, BRSC has increased its positions in companies such as brick manufacturer Ibstock, paving supplier Marshalls, and top 10 holding Breedon, and that's a leading construction materials group in Great Britain and Ireland. Turning to performance, the trust has a consistent track record of returns. It's outperformed its benchmark for 19 of the last 21 financial years, although its focus on quality companies can affect its shorter term performance. Despite the headwinds for UK equities, including weak investor sentiment and a difficult macroeconomic environment, there have been a number of examples of positive stock selection in 2024. One such example is Funding Circle. It returned to profitability earlier than expected after a restructuring plan, and that's driven impressive share price growth. And this highlights the potential for alpha generation at the smaller end of the market, which can often be overlooked by other small cap funds. Another success was the acquisition of AIM-listed self-storage company Lock & Store by European operator Shurgard at a 16% premium to the previous day's closing price. As we've already mentioned, the investment trust structure is particularly well suited to investing in smaller, less liquid companies. And while the primary aim is capital growth, dividends have been a key feature of the trust due to the cash generative nature of many of BRSC's holdings. Now, the trust has increased its annual dividend every year for the last 21 years, making it an AIC dividend hero. And it also has significant reserves to support future dividend payments. BRSC has the ability to gear up to 15%, although gearing has typically ranged from 10 to 13% over the last year. And Roland has access to a long-term facility fixed at a competitive rate that should support long-term returns. Now, while valuations in the UK remain compelling compared to long-term averages, Roland has recently reduced his gearing due to the weak investor sentiment and the more challenging macro backdrop, as we've just discussed. Moving on to discount, this is currently wider than the 5-year average, but in line with the wider sector. And the board has continued to buy back shares to manage the discount, and this discount could narrow if sentiment towards UK equities improves. In terms of fees, BRSC has a tiered management fee, and that passes on the economies of scale to investors as the trust grows. So the first tier of charges starts at 0.6% for the first 750 million of total assets, before reducing to 0.5% above this. There's no performance fee, and the current ongoing charge for the latest fact sheet is 0.7%. If you'd like to find out more about BRSC, there's a wealth of information available on the KTI website, including our latest research note on the trust. And I can also recommend the insight articles on the BlackRock website, where the managers discuss their thoughts on opportunities in the UK small cap sector. Thank you for watching, and we hope you join us again soon.